Hello everyone. Today we will be telling you about market outlook and trading ideas for the week ahead with Mr. Imran Vora, VP Equity Research.
Hello friends. In the current week we have seen that the market has closed at a level of 14,529 with a massive weekly loss of 453 points, or in terms of percentage minus 3.02%, specifically on the back of global sell-off. What we have observed during this week is that the market was unable to make a new fresh all-time high, and in fact has formed a lower top lower bottom formation and closed at a 3-week low, which shows the bearish undertone in the market, at least from a short to medium term perspective. Talking about the momentum indicator, we have seen that the momentum indicator has breached 50 mark, which shows immediate weakness in the market. Now talking about support and resistance level, in the immediate term, specifically the support level of 14,467, which is the current week low, will act as a major support zone, and below that at directly 14,185. On the higher side, the market is going to face major supply around 15,065 level, which is a gap resistance area, and above that at 15,431, which will be an all-time high. Seeing the current strategy in the market, what we have observed is that we have seen an intermediate correction in the ongoing main trend, which is an uptrend. So we will still buy near the support area with a strict stop loss, placing in the zone of 14,467 for any new fresh long position or for all the existing long positions. We have identified two stocks which has the potential to outperform the broader market. First one is BHEL, also known as Bharat Heavy Electricals Limited. One can buy on minor dip around 47 with a stop loss placing at 43 rupees 50 paisa. And upside potential for this counter is up to 55 rupees. Another stock which seems to be strongly outperformer is Coal India Limited. One can buy on minor dip around 150 with a stop loss placing at 142 for an upside potential of 180. So that's it for the current week. See you on next Friday. Thank you very much for joining us.